Hi, I'm Jonathan Wernick, Global Equity Analyst at Sasfin Wealth, and I'm joined as usual by my partner, Craig Pheiffer.
Hi there, Jonathan. Nice to be here again.
Craig, it's been a volatile quarter, lots of ups and downs. What's been happening?
Yes, we started off the year on a very positive note. It was a green January. Trump had just been inaugurated. There was a lot of optimism that we were going to see some tax cuts in the US. There was going to be a lot of deregulation coming, and that would help boost sectors like the finance industry. We'd see a lot more mergers and acquisitions, and the market was pretty upbeat about things in January. One of the other Trump promises was around tariffs, and the market started anticipating from February what was going to happen on the tariff front. There was a tweet in the morning, a tweet in the afternoon, and it was always very different. And there was threats of tariffs, and those were rescinded the next day or later. So the market really just didn't know what was going on. And then Trump announced that on the 2nd of April, he was going to have this Liberation Day, and he was going to announce all of these reciprocal tariffs. And then that set the market on the back foot from the start there. And then, the market kind of softened up a bit, thinking, okay, maybe it's not going to be so bad. It's just reciprocal. But, as the months wore on, as we got closer to Liberation Day, the markets really started getting a little nervy about what those tariffs were actually going to be. So we had a bad February, I think down 1.5% or so on the S&P, but really ahead of these tariffs in March, the market lost 5.8 to nearly 6% on the S&P. Just about all of the uncertainty that was going. The market just didn't know what was coming, where we're going. There were concerns around what might happen to inflation on the back of the tariffs, and then what might happen to growth. And ultimately, if the economy is on the back foot, corporate earnings are going to be lower, and that would mean ultimately lower prices that shares should be trading at. So just all of that uncertainty created this tumultuous market, and we ended off the quarter on a pretty sour note. Jonathan, part of the turmoil of the first quarter had to do with a lot of the technology stocks. We had the introduction of this DeepSeek that set the cat amongst the pigeons. We also had Tesla was on the back foot, just given how well BYD was doing in China. It just wasn't a great quarter for tech. So how did that impact the stocks in the portfolio?
Well, Craig, you're quite right. Portfolio was not protected. It was quite a difficult quarter for us. And one of the challenges was the US tech stocks that we hold in the portfolio. We're talking about the Alphabets, the Amazons, Apples, Meta, Microsoft, Nvidia, all had a very difficult quarter for the reasons you mentioned. The tariffs, of course, I think everyone's probably well aware of what's going on there. And I think something to be aware of is that these tech stocks were quite highly valued coming into the start of the year. So any bad news would definitely be a negative for them. And they were relatively more impacted to the downside because of the talks around the tariffs and the negative impact. And of course, this whole thing about DeepSeek, the still unknown Chinese startup that is seeking to challenge these enormous US companies. And it also put a question mark around this idea of American exceptionalism and whether or not that still holds. We'll have to wait and see. But from our perspective, we are still happy to hold these tech stocks. For the most part, we believe they are high quality businesses, and we do believe they offer attractive growth prospects still for the most part. And if we're going into an environment that may be particularly challenging, I think they are well suited to just manage their way through the environment given their massive resources at their disposal. So Craig, a lot's happened during the quarter, and since then a lot's happened as well. Where to from now? What's the outlook?
Well, the outlook is still quite hazy. One's never quite sure how this story is going to play out. There's tariffs and counter tariffs and threats, and we've still got wars going on. So there's a lot of noise in the system. the volatility of the market has reached peaks we haven't seen since the pandemic, and previously to that, the global financial crisis. So these are kind of unique times, or one of those special times in the market where things are just going crazy. And, it's a time when we tell clients to just rather sit on your hands and wait for those opportunities to come. But I think we have to just be cautious. One's never quite sure how the dust is going to settle, when the dust will settle. And we just, stick to our knitting on the management of the portfolio. I say when the dust will settle. I think the volcano is still spewing a lot of dust, so it could be some time still before that dust has settled. But we'll just be cautious and look for those opportunities.
I think one thing is for certain, we're definitely going to have a lot to talk about in the next quarter. But for now, we'll leave it there. Thank you for joining us.